Welcome to the John Trading channel. I'm John, and in today's video, I'm going to go over this major crypto crash that's happening right now on the entire crypto market and on Ethereum. We're down over 5% today. Plus, I have a lot of crypto news to go through with you today, and I'm going to go through some altcoins plus Bitcoin, so make sure you stay tuned until the end of the video. The first place I want to begin is on Bitcoin on the weekly time frame. You can see that we were using this exponential moving average to ride to the upside, but we finally actually just cracked below the 20 exponential moving average, which shows to me that there should be some further momentum to the downside. The reason this is you can see in this area, as soon as we did crack below, there was a strong push below, but you can see just because we are getting a push below, as long as we don't close below this actual 20 exponential moving average, see in this area, we did try and wick down, but we never closed below in that area, whereas we did come back. Either way, I have been stopped out on my trade for Ethereum. As much as this is Bitcoin, very similar to the Ethereum chart, we have broken below this low, and I have decided to get out of the trade because we definitely could have some lower prices. This could continue to move to the downside, potentially for a couple of more weeks, before then looking to then confirm to the upside. Because of this strong breakout in this 20 exponential moving average, I do feel like the bull market is definitely back on. If we do a 4-year cycle, back like I've showed you in a past video, then you want to understand that we basically ended the 4-year cycle right on this November low. As we're now 4 cycles into the new 4-year cycle, each cycle is broken up into 60-day cycles. We're currently into our 4th cycle, and that last 4th cycle usually does determine that we could be left-hand translated, so we need to watch out for that. The next thing I want to show you is in this last crypto bull run that we had on Bitcoin. So at this absolute low, we made it down into this $3,000 area for pushing up to over 13,000 before then pushing down to 3,900. So look at all these areas. This entire time frame, all the way from here to here, is the crypto bull run. So look at how we did have some declines. Look at the area that we're currently in from this top to this bottom. We're down a modest 17%. But look what happened in this area. Look at some of these drops, even just from this top just to this medium low, which not the absolute low. Bang, that's a 32% drop. Let's even see from this top down to this bottom, another 37% drop. And if you include this entire drop from top to bottom, we dropped 70%. Before then, if we absolute count from the lows to the high, we made a 2,000% gain, over 20x profit on Bitcoin in the last bull run. But we had cycles where we were down 70%. Let's even look at some through here in this area. That was just over 20% decline. Even in this area, down 16% decline. In this area, down 30% decline. Look at this high coming down to this low, and then we broke the all-time high again. So look at just in this price, over 53, nearly 54, nearly 55% to the downside, before then basically doing a doubling from this low on this price and up, we made over 130%. So just because right now I'm only including this as the new crypto bull run from this low here all the way through to the new prices that are occurring, just because we have had a bit of a little drop in this area, only 17%. If you look at the entire modest side of crypto that happened last time, then this really isn't much. You can actually compare, if you can see this part, you can actually compare right in here, looks very similar to this part through here, how we're making this downward sloping trend line channel. In this area through here, we're making that downward sloping trend line channel, and that's nearly exactly what we're doing here. Might look for a bit of a spike up soon. We could expect at least a second move to the downside, like exactly what happened here. So we just need to keep our eyes open, but also understand that in the greater scheme of things, that just because we're down 17% from that local high, then it does not mean that the crypto bull market is over. We had plenty of drops in this market. Even if you bought right when the all that stuff that went on, making over 1,500% on that trade just from this low, even if you didn't get in at the absolute low. So really, to me, what I'm using them as is buying opportunities to basically average my portfolio down so I can ride this next 4-year cycle to the upside, just because, and we are still following that parabola, like I've showed in previous videos, that we're still right on that line, and just because we're having a bit of a decline doesn't mean that it's all over for crypto just yet. The next thing I want to show you is Ethereum on the daily time frame. You can see back in this area through here, we basically were in a trading range, but we have began to actually break below this stop right through here. The thing is that a lot of people would have placed their stops in this area if they were looking to go long all in this area here. A lot of them would have placed stops here. Some of them even would have placed stops below this low. A lot would be here. So right now we could even just be trying to flush these absolute lows, but it's not making me extremely confident once we had this super down, super up, super down day, and now we're continuing with a really stronger day and outside of this actual channel. Because if we continued in this area from this high to this low and just continued bouncing, that would have been more probable, or more probability that we then could still continue to the upside. But now in this instance, since we got an even break below this sort of channel and looking like we are getting a lot of stops, this could and is a sign that some bullishness will come in, because a lot of stops were in this area. You might get some buying coming back in, because to get out of a short, you do need to buy back. So depending on which position you're actually taking, that could have been the play. But the thing is right now, it's not looking overly bullish. We have had bit of a downtick in the exponential moving average. As much as we were having a bit down and a bit up all through this area, it's just not indicative of being super bullish. What I am expecting is at least some more of a downturn, maybe down into this area here, as you can see, maybe even coming back to retest some of these zones in this area, which would be on Ethereum, $1,500 per Ethereum. But as I said, personally, I'm going to be using it as a buy the dip strategy, because I believe we're still in the bull run, and I'm just going to use these lower prices to basically average into my position. The reason we could be having this major downturn in the market is due to some of this news that's been coming out, showing that what crypto.com is actually doing. The crypto exchange announced that it plans to halt services for institutional traders in the United States on June 21st of this year. So we're basically just less than 2 weeks away, and they're going to halt institutional traders, which, if you really think about the market moves on institutional traders. Us as retail traders, we're basically buying into the market, but we don't have the opportunity to actually move prices up and down. We buy with a $10,000 position, $50,000 position, but it's when you need tens of millions of dollars or even billions of dollars, especially in Bitcoin and Ethereum's case, to actually begin to move the market. So when we're trading such smaller strides, and we're basically trying to piggyback on the back of institutional traders and what we expect them to do and continue doing into the future. We basically piggyback onto those traders. So when we see institutional traders being halted, basically means that a lot of the volume, especially coming out of the United States, is going to be halted at the same time. We also have the UK financial watchdog introduces tougher rules for crypto and its advertisements. So with its marketing rules, they're definitely becoming more stringent, and it looks like it's banning refer a friend bonuses that you get with the crypto exchanges. So again, just tightening that regulation, which in this particular instance, I don't think is the worst thing. So you can see the world's reserve currency status does not last forever. This looks like the Portuguese flag, potentially, sorry if I'm butchering it, somewhere around the 1400s to 1550 markets. So back through those years, then we had Spain through 1550 all the way to roughly 1600s. Then we had France hold the world reserve currency for 95 years. Then Britain held the world's reserve currency for 105 years. The USA is currently holding the world's reserve currency, going on for 79 years. And it looks like it's coming to an end, which truly is, especially if you've been following the videos and the news I've been showing you. Bitcoin will be the future world reserve currency, and I 100% believe that that's when we truly will see that massive skyrocket in the crypto market.